Hey everyone, it's James Mackey here with the Kiefer team. I think one of the biggest things investors are underestimating today isn't necessarily AI itself. It's the amount of money that's being spent because of AI. When people hear AI, they immediately think of Nvidia or Microsoft, but in my opinion, the much bigger story is what all of this spending is doing to the overall economy. Let's take a look at this chart. On the left, you can see capital expenditures from the major hyperscaling companies like Microsoft, Amazon, Alphabet, Meta, Oracle. Just a few years ago, these companies were spending roughly $150 billion annual in capital expenditures. Today, that number has exploded. Consensus estimates have annual spending approaching $1 trillion by 2028. That's an incredible amount of money flowing into the economy. If hyperscalers spend is approaching $1 trillion by 2028, what does that mean for investors? Here's what's important. This spending doesn't stop with the Nvidias, Microsofts, Google of the world. Every dollar these companies spend has to go somewhere. Somebody has to build the data center. Somebody has to manufacture the transformers, pour the concrete, fabricate steel, install electrical systems, manufacture cooling equipment, transport all those materials to site. This is creating demand across dozens of industries, not just technology. And AI isn't happening in isolation. We're also seeing an enormous wave of domestic investments from companies outside of technology. General Motors continues investing billions in EV and battery production. Eli Lilly is building multiple pharmaceutical manufacturing facilities in the US. Johnson & Johnson has announced major investments in domestic manufacturing. Taiwan Semiconductors is building a fabrication plant in Arizona. Micron is investing heavily in US semiconductors. Intel has announced new fabs. Multiple pharmaceuticals, industrials, defense, energy, semiconductors, and manufacturing companies are committing hundreds of billions of dollars to build capacity here in the US. When you combine that with AI infrastructure spending, you're talking about one of the largest private investment cycles we've seen in decades. And why does that matter? The US is primarily a consumption driven economy. Roughly two-thirds of US GDP comes from consumer spending. When these projects are built, they create jobs. Many of those jobs are blue collar positions: electricians, pipe fitters, welders, heavy equipment operators, HVAC techs, construction workers, engineers, truck drivers. As labor demand increases, wages tend to as well. Most households don't save every additional dollar they earn. They spend a large portion of it. They buy trucks, renovate homes, they eat at restaurants, take vacations, purchase appliances. That spending becomes revenue for other businesses. Those businesses hire more people in turn. Those workers spend more money again. Economists call this the velocity of money, the same dollar moving through the economy multiple times. We saw versions of this after COVID. The government injected roughly 4.5 to 5 trillion dollars of fiscal stimulus into the economy. That helped fuel economic activity for years afterwards. Today, much of that stimulus has worked its way through the system. But what we're seeing now is different. Instead of government stimulus, what we're seeing is largely private sector capital investment. Companies are choosing to invest because they believe the returns are justified. Now, none of this means the economy is risk free. We still have real concerns. There's geopolitical tensions, the wars in Ukraine and the Middle East, tariffs, inflation, interest rates. Those storm clouds absolutely exist. But as investors, it's important to look at both sides of the equation. The backdrop also includes one of the largest investment cycles we've seen in decades. If businesses continue to invest, workers continue to earn, consumers continue to spend, and companies continue generating profits, that's really a supportive environment for long term corporate earnings. And ultimately, if you're invested in those quality businesses, you own a piece of those earnings. So while headlines often focus on risk, and those risks are real, I also think it's important to recognize the tremendous amount of capital currently being deployed across the American economy. In my view, AI isn't just creating the next generation of technology, it's helping finance the next generation of American infrastructure, manufacturing, employment, and ultimately economic growth. If you'd like to talk to our team more about this or anything else, please reach out and schedule a meeting and we'd be happy to discuss. Please feel free to send this video to anybody you think would benefit from it. Thank you so much and have a wonderful rest of your day.